What's going on, guys? I'm going to be showing you some simple ways to make a decent living day trading call and put options using only two windows. So let's get started. With the first window, you're going to want, here, I'll just click this first. With the first window, here's what you're going to want. You're going to want to be looking at tradingview.com. We're going to be using Tesla as an example here. And here's what you need to know. You're going to want to open up the RSI tool chart. This little chart here will show you roughly where the momentum is going for a particular stock. So if there's a lot of buyers and there's a lot of momentum of the stock price going up, this will show you when it hits that overbought territory. When it hits the overbought territory, expect the price to come down, and you can see that reflected in the chart here. So here's the momentum. This chart is again for the momentum, and this chart here is for the actual price. So when momentum's going up, you see the price really shooting up rather drastically, and now we're in technically the overbought territory, and then the price naturally comes down. And then when you see the price drop like this, the momentum to sell goes way, the momentum to sell, goes in this direction here. So here's the thing now. How to use this to your advantage is through the power of buying the stock, or what I like to do is in call and put options. So here's what you need to use. Here's the current price for Tesla right now is $540. So here's the thing. You need to go over to here and you need to buy a call and a put option based on what you see in the chart here. So if you don't know the difference between a call and a put, basically with a call option, you are expecting the price of the stock to go up, and then with a put option, you are expecting the price to go down. Now, here's the thing. Use this as your weatherman to predict when the stock is going to go up or down. When you're in overbought territory up here, when it's above the purple here, you're in overbought territory, which means the price will come down. Very rarely it doesn't mean you can't have violent swings like this. Like, see here, like you didn't have again to overbought territory here, and it shot up this stock shot up quite a bit here, but it wasn't in overbought territory. It doesn't mean you can't have very big swing differences here while within this chart, but usually without exception, as soon as you're oversold here and here, oversold here and here, you have the price recover. So it's oversold here, price recovers. It's overbought here, price drops. Overbought here, price dropped again, or it was almost overbought here. But here, it's when you zoom in, clearly oversold here, price went up. So when it gets down here, buy a call. When it gets up here, buy a put. So when you do this regularly, here's the thing. This stock can just fluctuate, just a few dollars here, but it can mean hundreds of dollars difference over here, especially if it's a popular stock like Tesla or Amazon or Google or something like that. Now, here's a couple screenshots I took earlier, and I highly recommend you do this. If you're new to this and you haven't played around with these charts, just do what I did here with this screenshot here. Have your Robinhood account or Webull or whatever you use over here, and have your TradingView chart over here. Here's what you do. Figure out what's the stock trading at. At this time it was trading at 549, and it was in overbought territory. So 549, overbought territory. So here I picked 550 just because it's close to 549. To buy a put, because it's overbought, we're expecting the price to go down, and you buy a put when you're expecting the price to go down. So we expected the price to go down. We bought a put, $2,300, and that was at 8:38 this morning here, same day. Then, not even, you see up top here. The first one was 8:38. Now we're like an hour and 15 minutes later. An hour 15 minutes later, this same price here is now worth $3,000, and the stock only dropped $12. So again, look at that here. The stock was at 548 and it dropped $12, and that meant more than a $700 difference just from that. And all you had to do was just look at this chart here. Now, again, this isn't 100% accurate all the time because you never know what new news is going to come out that will drastically change the environment. Maybe Elon Musk runs himself over with one of his self-driving, Teslas or whatever it is, If something like that happened, that would be a pretty significant hit to the stock because one, your founder's dead, and two, it's because of your own product. So that doesn't look good for the company. So no matter what your chart says here, if some bad news comes out like that, this is gonna, send the stock price plummeting down. Or a Tesla, finds a way to, save the president or cure cancer or something like that, then the stock price would go up, even if you were in the oversold territory, or the overbought territory. So this isn't a foolproof way, but it is a relatively effective way to day trade put options. Hopefully this was useful. Please like, subscribe, comment, ask any questions you may have, and we will catch you guys later. Have a good one. Thanks.